Good morning and good afternoon, ladies and gentlemen. Welcome to this live event broadcasted from the Netherlands. This webinar is organized by the HIDC in cooperation with Bridge Legal and Finance. We will start shortly. Good morning and good afternoon, ladies and gentlemen. The webinar will start shortly. Good morning and good afternoon, ladies and gentlemen. Welcome to this live webinar, Servicing Your European Customers in the Age of E-Commerce, broadcasted from the Netherlands. This webinar is organized by the Holland International Distribution Council in cooperation with Bridge Legal and Finance. We have many participants from the United States, Canada, and Europe, so enjoy your morning coffee or afternoon tea while we get this started. During this webinar, we will present you the latest best practices on how to serve your European customers from a logistics and tax perspective. Dennis Pietersma, Senior Engagement Consultant at Bridge Legal and Finance, will introduce the agenda and moderate today's event. Dennis, please go ahead.
Good morning, everyone, and welcome to this webinar about servicing your European customers in the age of e-commerce. In the next 45 minutes, you will hear from our three experts on current developments in Europe and best practices on logistics, as well as tax for businesses from North America that sell products online in Europe. First up are Jelle and Stan, both working for HIDC, which stands for the Holland International Distribution Council. They will focus on recent developments in Europe that are driving e-commerce sales and the implications for organizing your logistics. Secondly, you will learn from Jurgen de Groot, my colleague, and also partner at Bridge Legal and Finance on how to deal with taxes when selling online in Europe. Finally, there will be ample time for questions from you, the audience, so please feel free to share your questions and thoughts through the Q&A box. Depending on time, we will get to them at the end of each presentation, or we'll move them all to the end for a quick Q&A session. The session is being recorded and will be shared with you, together with the slides that are presented, so keep an eye on your inbox. Stan, can you take it from here?
Sure, thank you very much, Dennis, and good to be hosting this together with Bridge today. Yeah, it's been a long time that we've been to the US and Canada, but we've seen a lot of interest in the European markets. We've worked with a lot of US and Canadian companies that are setting up logistics in Europe to grasp the opportunities that the online boom present. It's a time with a lot of challenges, undoubtedly, but there's definitely possibilities as well, and that's what we're talking about today. First, I want to talk about what's new in Europe. Well, before I do that, it's not logical that everybody knows HIDC, although we're hosting this. But yeah, we've been around for over 30 years. We're a non-profit organization representing and promoting the Dutch logistics industry. And we consist of about 300 members, all organizations and businesses that are active in international logistics. So that means the logistics infrastructure in the Netherlands, like the Port of Rotterdam, Amsterdam Airport, but also a lot of business services. Here you see a few, but we have many members that help the logistics and the shippers industry doing their business in Europe. Then our largest group would be the logistics service providers. These are just a few, but we have a lot of them ranging from the large international logistics companies to more specialized local Dutch businesses. And we are also representing the regions and cities in the Netherlands that host a lot of logistics activities. Our focus is working with exporters from North America, but also from Asia that are looking at the European market and want to enter or optimize their existing supply chain. We give them advice, we help them find the right partners in logistics and in business services, and we help them set up, but also afterwards, if there are questions, we can give free advice and matchmaking services. We work closely together with the US Commercial Service, with state export promotion agencies and the NFIA. So what's new in Europe? Well, you've probably heard about this thing called Brexit. It has happened, finally. We've been preparing for a long time, but still, since the 1st of January, it came as a bit of a shock for a lot of businesses in Europe and outside Europe that have goods moving through the UK. Well, why is that? It's because even though there has been a trade deal signed, this trade deal hasn't prevented a hard Brexit, meaning that the UK is no longer part of the European Union customs area. And that means that every shipment between the UK and the EU is now an import-export, where that was not the case. So that means a lot of extra administration, a lot of extra hassle, and it has caused a lot of disruption in the last 1.5 months, as you've undoubtedly read in the newspaper. So honestly, just-in-time shipments between both markets have become very difficult. It has become a lot more expensive as well, because you have to make sure that all the paperwork is in order. It's not as easy as just the shipping. There's actually a lot of things you need to consider, like the value-added tax, for example, that we'll talk about during this session as well. We've seen it in the figures in the last 6 weeks that the export from the UK to the EU has dropped 2/3, so that's very significant. Currently, we're working with a lot of UK companies that need a quick fix, so they need to fix their supply chain. They can no longer supply their customers on the mainland as they want to or they are used to. So they are working with us and with our members to set up a local entry point into the mainland market, where they ship products consolidated and then deconsolidate here and do their fine mesh distribution across Europe. UK distribution and even the DIT in the UK, so the trade advisors there, they are saying that European Union distribution from the UK will remain difficult going forward. So they are also advising businesses to do their European Union distribution from inside the European Union. Well, me and Jelle, who will speak later during this webinar as well, we work mostly with North American companies, and they're also looking into a different model. And you can see that in the pictures here. They are thinking about maybe setting up 2 distribution centers, one for the UK market, one for the European Union market, or maybe supply the UK, if that's a smaller market than the EU, from the EU proper. So yes, what about COVID-19? Currently in Europe, there's curfews in place. A lot of stores are closed, so people are forced to buy online, which is actually the same as almost a year ago when people suddenly started buying online a lot more than they were used to. So we've seen a significant boom in online purchases, and we think that's there to stay because a lot of people that never used to buy online, they found the benefits of it, and they will probably keep doing that going forward as well. We've also seen, and I know in North America, you have the same issue, that the long supply supply lines have proven very vulnerable. So with the erratic supply and demand that we're seeing, and the product coming from Asia in droves currently, that is really putting strain on existing supply chains. So we see companies here in Europe also that are looking more into having strategic stock in one place to make sure they can keep supplying their customers. So those brands and manufacturers are really redesigning supply chains to support these online sales. Okay, so that's what's new in Europe. What's not new is that the European market is a massive market for UK products, but also for US and Canadian products. There's a high demand in mainland Europe for brands from these countries, and that's here to stay. Even if the UK is no longer part of the EU, you can see there in the number of inhabitants that the European Union is still a sizable market in number of inhabitants. It's almost the size of, or more, it's larger than the US and Canada combined. And the benefit is, even though it's 27 countries, as soon as your product hits one of these countries, so you're custom clear these products, they can move freely across these 27 countries. So already mentioned, a lot of Europeans are buying online more. So it's double-digit growth last year and probably this year the same. And what we also see is that Europeans are becoming more accustomed to buying in other countries online rather than just in their own country. So PostNord, this research of last year, they showed that about 75% of European consumers buy cross-border, and that can be a neighboring country. So in the Netherlands, we like to buy from the UK, from Germany, but it can also be from the US or Canada. But it is important to meet their demands, which is swift delivery, great customer service, great return service. And to be able to offer that, and it's really crucial, you have to have a local setup, and that's what we'll talk about today. For businesses, if you're selling B2B, same story. All buyers, they are also private persons, they buy online, and they are more and more expecting the same Amazon experience, if you will, in their business to business work as well. So if you sell business to business, then customers will be quite demanding, especially when they buy from you online, from a platform or maybe from your own website. Okay, so that was my introduction, and here I'd like to hand it over to my colleague Jelle for the next part. Jelle, please go ahead. I can't hear you, Jelle.
Sorry. Beginner mistake. Sorry. Good morning, everybody. Nice to be here this morning and tell you a little bit more about well, the aspects you need to take into account when looking at setting up a logistics operation for your European business, both from a B2B as well as a B2C perspective. So I'll talk a little bit about a few models you can well, think about here. But it all, of course, starts with a plan. So what is your roadmap for entry to the European market? And I think three main portions or three main aspects you should consider. First of all, understand the market. So what's the market size, but also what are the different language implications? What are the local cultural differences between European countries? Because it will really have an effect on your strategy. Next to that, there's a regulatory environment you need to take into account for your specific business. Think of CE marking or REACH. And also more and more important in the coming months will be that you will have an authorized representation from July this year as a foreign seller in the European market. We can tell you a little bit more about that in more detail, so please let me know when you would like to learn more about that. But now I'll keep it with the more broader lines of setting up a business. And also your business strategy is very important, that your marketing plan, your service offerings are really part of one strategy, and that you really have a solution to the market that is enabling your business. So logistics and the solution you make here is all in sync with these aspects of the business. So it's really enabling the strategy you have. So yeah, that should be, of course, flexible, but also efficient, and it should really be able to grow your business for the European market. Next slide, please. Because when you look at, say, the indirect supply chain model, when you are selling from the US or Canada directly to your European customers, there's quite some limitations. You have no direct customer contact. Your distributors are serving more manufacturers. You have longer lead times. So it's not a very appealing service offering for your European customer base. Also, your European customer could really have difficulties in accepting to pay import duties, for example, when acting as an importer of record. So this model is really not the most effective when also trying to grow your European business. Next slide, please. Because when you look at the different customers you have in the European market, they are, of course, quite demanding, and they should. So you can see these kind of questions popping up from your customers in Germany, France, that your lead times are too long when supplying the market, that a competitor of yours is having far better service levels. And you can read the questions here. The main point here to make is that the flexibility to grow your business is not there when going in an indirect model. And you also yourself can think of, am I getting the most out of the market? Next slide, please. I need to improve my service levels. Customers are expecting that you can sell both B2B, B2C, that they can sell low volumes, that they have good returns. So the entire setup and the customer experience is very important. And with an indirect model, you're just not in control of the flow. Next slide, please. So when you turn that model around from going indirect to go direct, you also see a change in Incoterms. You agree with your customers. The left picture is showing the control you had before, say from production, manufacturing, and then the customer would take over the entire logistics chain. With the direct supply chain model, you agree different sales terms, and you are far more in control of setting up your business with both B2C, both B2B customers. And you also have a high level of flexibility, because when you would need to add the customer, or when you would need to add a certain flow to a certain market, you can do so much faster and much more reliable. Next slide, please. And I think this model, when you look at business to business, is really telling the story quite well. When you opt for a centralized stock in the Netherlands, you can cater for your entire European business, either shipping to distributor or master distributor, sending to end users. And as mentioned, you can really add new lanes, of course, quite fast. Also, when you have a setup like this, it often is combined with a fiscal representation model in which you are exempted of prepaying import VAT. But you can also opt for bonded warehousing as well. So when you would sell to Israel or when you would sell to Norway or the UK, all non-EU countries, you don't have to pay the duties when selling or when storing it in the Netherlands. You would only pay it when you sell to these countries. And besides that, the activities you perform in a warehouse in the Netherlands can be well, a lot of value-added services as well. So it's not only about storing the products, it's not only about having stock and sending out parcels or pallets. You can really become a partner with your logistics service provider and start to work on postponement activities, so making shipment customer specific for the end market, say putting a British plug in the British shipment, or a certain manual, or kind of rework activities like labeling or packaging. You can really well, give the logistics service provider a lot of responsibilities in that area and really make sure that you are a partner in running that operation. They are really an extension of your business. And it can even go that far that they run your customer service department, or that they will even invoice on your behalf. So there's really an integration with the business. So really a one-stop shop principle, both for you as a manufacturer, but also for the customer. That is of great benefit. And also they can order less quantities if they like to. Next slide, please. And this is a similar model, but this works very well also for a combination of both B2B and B2C, or only B2C fulfillment operations could work well as well. When you learned right now about the cross-border e-commerce that is booming, you could easily set up a warehouse in the Netherlands to cater for the European markets, Germany, UK and France being the largest markets when it comes to e-commerce sales. You have a lot of short lead times from the Netherlands to these neighboring countries. You can also opt for sending the shipments directly to the local networks. So when you have a late cutoff, you can go during the night to the local parcel carriers, and they will feed it into their local networks for next day delivery. But also your return process will become very easy, and yeah, it's also very important when you talk B2C and in relation to the customer experience. You want your customers to come back as well, so you really need to have things like that set up properly, as yeah, the logistics is really enabling the growth of the business in Europe. Next slide, please. Well, takeaways for the moment. Selling online took a huge flight, also for B2B, as mentioned. You see here the figures for the several countries in Europe, yeah, what the sales were over the last years, and both for B2B as well as B2C, the Amazon experience is a must-have. So your logistics setup really should cater for that demand. And there are many options out there, also looking at specialized logistics service providers for certain niche markets that can take care of that part of the business. Next slide, please. So what are our services as HIDC? Well, we give advice on supply chain topic, both logistics and tax. And we connect you to the right logistics partners. As mentioned, our council has around 300 members. so we can have a conversation with you about your demands, and then we will have a look into our member base to see which companies are a good fit to your specific need. Pre-COVID levels, or pre-COVID, we also did quite a lot of fact-finding trips. Unfortunately, that's not possible anymore at the moment. Hopefully in the near future we can. And we are really there to support foreign companies, both in close cooperation with the NFIA, the Trade Commissioner Service, and the Canadian provinces. Our services are free of charge and confidential, and yeah, we're there to help. So should you have any questions, or would you like to be connected to logistics partners, please reach out to us anytime. Thank you very much. And Stan, I'd like to head over now to you to mention a example of a company we helped in the European market. Thank you.
Thank you, Jelle. Yeah, I wanted to talk about one example, just to give it some depth. This is a company that we've helped recently. They just started their distribution from the European Union, but they've been active in Europe for a long time. And this company, Streamlight, they sell all kinds of lighting products, illumination tools, they call it themselves, but it's all kinds of flashlights and large lighting products, and they sell to distributors. So they do sell online, but not directly. So they still have this indirect model where they rely on a wide variety of distributors and retail chains that sell online themselves. So indirectly, they do sell online, but they have great distribution contracts in place. And these distributors, they were fairly satisfied with ordering from Streamlight in Pennsylvania, but they always had to order in large quantities and in low frequency because it was coming by sea from the US. So a lot of distributors, they actually refrained from buying a lot from Streamlight because their service levels were not on par with their European competitors. So together with Streamlight, we were looking for their best logistics partner, and we found one in the Amsterdam region that they've partnered with. They also do their fiscal representation, and their goal was to offer shorter lead times, a higher frequency of smaller orders, and reduce overall costs. Because if you consolidate your transatlantic shipments and deconsolidate it here, then the expensive part of the shipment, which is transatlantic, is consolidated. So in the end, it will save on the total transport costs. So we found them a full-service third-party logistics company. And the result is now that their lead times have been cut from 14 to 18 days. That was before. After it's 24 to 48 hour lead time. Also, the minimum order value have dropped significantly. So distributors and also smaller clients, they can easier order more frequently and keep their own stock levels to a minimum. And that's something that distributors love, of course. And they get full pricing, so there's no issue with VAT. If you sell product that's already in the European Union, you can apply a 0% VAT rate if you're selling to businesses. So your customers, if they are businesses, will love it. And you can sell also directly to consumers without them having to pay VAT and duties on the border. So this is a great benefit, but it is a big step for a company like Streamlight. It's mostly a matter of finding the right partner. So yes, that as an example, and then I want to hand it back over to Dennis, because there might be some questions, Dennis.
Yeah, there's a couple of questions coming in already. Will we have access to the slides? Yes, most definitely. This whole webinar is being recorded, so afterwards everybody will receive a link to the webinar itself, to the recording, but you'll also receive the slides afterwards. There's a question about authorized representation. I'll come back with that one for Jeroen after your presentation. Another question, when we have distribution out of the Netherlands, to the rest of the European Union, what language do we need to use on the label? Stan or Jelle, can you take that one?
Yeah, sure. So it depends on the product, actually. For some products, it's mandatory to have multiple languages on the label. For some products, it's not. So it depends on what type of product and what the directive is on that product. So there's EU directives for a lot of product categories. And we'll talk about that later with authorized representation as well, because you will need it for some categories and for other categories you won't need it. So it becomes a bit technical, but yeah, if the person who asked this question can share the product category with us, we can find out what the labeling requirements are. But there's two ways. You can put a lot of languages on the label, or you can ask if it's necessary, or you can ask the logistics company to add the label upon order, so they can relabel for you. So there's various ways to deal with that. Dennis.
Great, thanks. So thank you very much for your insights. Just a friendly reminder for the rest of the audience, if you have any questions, please feel free to put them in the chat box here in the Q&A session. And then we're going to hand over the floor to Jurgen. Jurgen, go ahead.
Yes, thank you very much, Dennis, and thank you, Stan and Jelle, as well, for that very informative presentation. Yeah, good morning, everyone. So I'm Jurgen. I'm one of the partners at Bridge. Briefly, at Bridge, we are a legal and financial service provider, meaning that we help companies when they're doing business cross-border. Majority of our clients are actually coming from the US and Canada, and are companies who are importing products here into the Netherlands or into the European Union, selling here, or setting up operations, setting up an establishment here in Europe. So we guide them through that. Today we're going to specifically focus on the tax aspects of when you're actually importing your products and selling that here throughout Europe. We'll also touch upon a few other items with regard to the legal matters that come into play as well. And we're going to do that, I think if we go to the next slide, through what we like to call the various business stages. Basically taking the approach of saying, okay, if you're starting out, what's the most simple form of how you could start out, most low-key form of starting out to sell your products in Europe, and how can you grow that and build that into perhaps even a larger presence here in Europe to serve the European market. We'll focus more specifically on the first three items because I think those are most relevant for the topic today. But the last three I do want to touch upon briefly as well. We'll go to the next slide. What we see in practice is that Europe does offer the possibility to grow, start small and grow, and to scale up your business, grow the company, and grow also your tax and legal structure as you grow your business. In general, we would say there's minimal red tape. There's not a lot of bureaucracy. There is, of course, some, and it does differ per country. We do have to acknowledge that. But of course, that's also what we can help you and guide you through. In the most simple form, if we go to the next slide. First, I think we'd like to maybe discuss or explain a little bit more. Okay, what does the EU VAT system look like? This is relevant because, especially as you're importing and selling your products, most of the taxes you will be dealing with relate to VAT. Jelle and Stan also referred to it a few times already as well. Basically, VAT is a tax that is borne by the end consumer. That means that when the end consumer buys a product, if I go to the store or if I order a laptop online for me personally, that includes VAT. And that's a charge for me. That's a cost, it's an expense. I pay that as an individual, as an end consumer. If it's structured correctly, everything leading up till that transaction should not be. There could be VAT implications, but it should not be a cost to the company. The rates do vary per country. If we go to the next slide, you'll see an overview of the various rates per country, just as an indication. Again, what's relevant for you to know, in principle, for you as a company, the rate doesn't have a big effect because it doesn't hit your P&L, it doesn't hit your bottom line. It's maybe a cash flow effect, but of course it is an expense for the end consumer, so it can have an influence on your product pricing. So that's why that's relevant. When you're then actually starting to sell into Europe in the most simplest form. Let's say you're just saying, okay, we have a product from the US or Canada. I have a consumer or a client in Europe. They order a product and you ship it. Basically, what happens is at that point, the product gets shipped. As soon as it hits the border in any European country, the customs authorities and the tax authorities will say, okay, well, who's the importer of record and who's going to pay the taxes on it? If you as a company do not have any registration, you don't have anything, that liability is shifted to the client, to the consumer. So that means that ultimately they have to pay for the taxes. As an example, I have a friend, and she a while ago she bought a very specific keyboard that she uses a lot she does a lot of editing and type work, so she wanted to buy a very specific keyboard that she ordered from the US. It's from a relatively small company. They basically said, okay, sure, we'll ship it to you. It was about $100. So a few weeks later, it was delivered, and the mailman was on her doorstep with the keyboard, and at the same time, an additional bill for almost another $100. So she was quite unpleasantly surprised because she hadn't realized that the VAT still needed to be paid for it, the import duties needed to be paid on it, and there was a handling fee as well on top of that. So she had never realized, and she had an unpleasant experience with that company because no one told her that there would be all these additional charges. So these charges are all shifted to the client, to the end consumer. Now, generally speaking, that might work if you're only having a few sales, but if you're serious about selling your products into Europe, this is generally speaking not the kind of situation you would like. Now, the first step you could then take is registering for VAT purposes. That would mean that you register your business, your US or your Canadian entity in one of the European countries to get assigned a VAT number, so that you can act as the importer of record, and that you will be paying the import duties and you will be paying the VAT upon import. If you recall, as I mentioned before, VAT should not hit your bottom line. So even though you're paying the VAT, you claim it back. So because you have a VAT registration, you file a VAT return in that country and you ask for a refund of that same amount of VAT. However, that also process differs quite a bit per country. And it can take sometimes up to 6 months, and I've even seen situations where it can take even more before you get that money back. Now, in the Netherlands, for example, the VAT rate is 21%. Other countries it's even a bit higher. So if it takes up to 6 months for you to have to pre-fund that 21% on all of your products, that has a significant cash flow effect. So that's not an ideal situation, but at least you control the process. You prepay it, you claim it back, and you sell your product to the end consumer, and they don't have to deal. You can sell your product including VAT, and they don't have to deal with filing any VAT return or doing anything like that. Like I mentioned, the VAT is a cost that is borne by the end consumer. So that also means that the VAT is in general taxable in the country where your client or the consumer is located. Again, as an example, if your client is located in Germany, that in general means that German VAT should be charged on that transaction. So if you're shipping something from the Netherlands to Germany, you will need to charge German VAT. If it's for a B2B situation, business to business, and your client has a VAT registration in Germany, they can self-assess, or we also like to call it reverse charge the VAT, meaning that you charge 0% and they report it themselves on their own VAT return, saying, hey, I've bought a product, I should pay German VAT on it, so I'm reporting that here in my VAT return as a taxable transaction, and most likely they can also claim the refund of the same in their own VAT return. That part is outside of the scope of your responsibility. That's what they will do as the business that is registered for VAT purposes. However, if it's a consumer, that consumer will not have a VAT registration. So the consumer will not be able to report that VAT themselves. So if the consumer is located in Germany, one way or another, German VAT will need to be paid on that transaction, on that sale. Basically, what that means is that up till now, still, you as a company would have to register in Germany, get a German VAT number, and charge German VAT to your consumer and report that VAT in Germany. Do you make a sale to another country within Europe? You have to go through the same process, register in that country, report the VAT there locally. That can, of course, become quite an expensive and cumbersome situation if you have to register in a lot of different countries, do filings and reports in a lot of different countries. At the moment, there are thresholds in place that determine whether you actually have to file in that country. However, that regulation is about to change. So as per July 2021, we're going to have what we call one-stop shop. And that means that in that case, you register in one country. For VAT purposes, you get a VAT registration in one country. And there you can do a filing for all the sales you've made in various countries throughout the European Union and report and remit your VAT to that one country. So as an example, you would register in the Netherlands and report to the Dutch government, the Dutch tax authorities, I've made sales to these various countries and collected these amounts of VAT, and you report it and paid it to the Dutch tax authorities. And then, of course, the local authorities between the countries, they make sure that they balance all the overall balances so that each country gets their own amount of VAT. So that's new legislation that's coming up that does make it easier. But still, taking one step back again, you're now having a VAT registration, but you're still having to pay the import duties and the VAT, and you have to claim your VAT back and wait for that VAT to be refunded. This is a process that basically works the same in all countries throughout Europe. And then if we move to the next one, there is something specifically to the Netherlands that we call Fiscal Representation. Jelle and Stan also mentioned it briefly already as well. That gives you some additional benefits. Fiscal representation basically means that you appoint a local representative that takes on the responsibility and also a liability towards the tax office. There's different forms of fiscal representation, both limited and general fiscal representation. I'm not going to go too much into those details. Which one is most suitable for you is mainly dependent on your type of transactions, where your clients are located, if it's B2B, if it's B2C. And of course, we can always assist you with that. In practice, what we see is that most of our clients, we set up a general fiscal representation because that gives you a bit more flexibility and a few more options. The reason why you need to appoint a fiscal representative, and if we'll go to the next slide, is because having a fiscal representative allows you to qualify for what we call the Article 23 permit or Article 23 license. An Article 23 permit, basically, we sometimes also refer to it as the reverse charge mechanism upon import, which is an even more complex way of describing it. But basically what it means is that when you have that license and you import products here in the Netherlands, you no longer have to prepay that VAT upon import. So rather than prepaying the VAT, your customs broker or your logistics provider shows at the border, we have a license. And of course, it's all done electronically, but just to paint the picture, saying, okay, we have the license, we are not going to pay the VAT right now. At the end of the quarter, when you file your VAT return, you report, hey, we've imported these products, there's for an X amount of value, we should have paid an X amount of VAT on that, but we didn't because we have the license. So now, at that point, the VAT becomes payable on that VAT return. But at the same time, on the same VAT return, you say, well, we have a VAT registered business, so we're entitled to a refund of VAT. So we claim back the VAT on the same VAT return. So at that point, it really just becomes a paperwork exercise because there's no cash flow, because the payable and the receivable, they offset each other. The balance is zero, so there's no payable. So it gives you a significant cash flow benefit because you no longer have to prepay that VAT when you import it and then wait for it to be claimed back. And like I said in the beginning, it differs per country, but it can take up to 6 months in some countries before you actually get that money back. And the reason why you need a fiscal representative is because in this situation, the Dutch tax office says, okay, well, we take some level of risk because we're not claiming the VAT from you when you're importing it. So we want to make sure that there's someone in the Netherlands that we can approach if, for example, you are not paying the VAT, or if anything goes wrong, that they can approach your representative and start asking questions or seeing, hey, what's going on. So that's why you can only get that license if you have a fiscal representative here in the Netherlands. We see that a lot of times there's lots of logistics providers that can offer this as a solution, but also service providers like us as well. We do this a lot where we act as the fiscal representative, because some companies, they like to split the tax aspects from the logistics aspects. What's also important to note is that in this situation, there's no corporate income tax liability, so you will only have a registration here in the Netherlands for VAT purposes. Corporate income tax is a tax on the profit that you're making, so you're not paying any tax on the profit. That will still be taxed as usual in your home country, so in the US or in Canada. That also relates to the double tax treaty, and I'll get back to that in a minute as well, as to why that could be relevant and in which instances you might have a tax liability, so that you can be aware of that as well. So yeah, the fiscal representation is really a route that we see that is very popular, that we see is used a lot. At the moment, you are importing and selling your products throughout Europe. You get a VAT number, you get the Article 23 license, but you do not have a physical presence yet here, other than that your physical goods may be here on the ground, but you don't have any people on the ground, you don't have any real substance. And then this situation works very well. Yeah, there's a few next steps I would like to discuss. But before going into that, yeah, maybe a little bit about product compliance. I think it was mentioned already, or before by Stan and Jelle. In the EU, we have quite extensive safety and packaging regulations. Also think about CE marks and such that all relate to what is required from a packaging perspective, but also from a product safety perspective. Now, new regulation says that if you are a non-EU vendor or non-EU manufacturer, so you do not have a local presence here in the EU, you're required to have a representative here within the EU. So basically that means you need to appoint an authorized representative who can act as your representative towards the local authorities. So for example, when the authorities have questions about product safety and they want to see some of the documentation, they would go to the representative. If you have your own substance, that is not required. So if you have your own actual presence, which we'll go to in a minute, but if you do not, so for example, in combination with a fiscal representation setup, you might want to appoint an authorized representative, and there's specialized firms that can offer that solution. As a next point, so let's say you do have a presence here and business is going well, and maybe at some point you might say, well, we'd actually like to have some people on the ground. There's a possibility to still hire local employees, and the non-resident employer registration is something you could combine with fiscal representation. Non-resident employer, that takes the position that the company has employees in one of these countries, for example in the Netherlands, but as an employer, as a company, you're a non-resident, so you do not have a sufficient substance, you don't have a local entity, but you do have some employees. So those would be employees for really providing supportive auxiliary services, which could be market research, maybe customer services, really activities that are not an independent business. If you do that, strongly advise you to set up an employment agreement following local labor law, and you would also run a local payroll. The non-resident employer registration basically means that we register the company with the tax authorities purely for payroll and social security purposes, so that you can run the payroll. Because if you have a local employee, they will be required to be on the local payroll, and you have to withhold local wage tax and pay local social securities. It's a pay-as-you-earn system. It's very similar as what you're used to in the US and Canada. Still in this situation, no corporate income tax liability. So it's important to keep in mind. And we can take that position because we're saying we're still only providing supportive and auxiliary services. There's no real substance at this point. So the company itself does not have to register yet. If I go to the next slide, we'll dive a little bit into the permanent establishment. So the substance I was just referring to, because at some point you might run into a situation as the business keeps growing where you actually do want to have substance here. You might say, okay, now the business is going well, we want to increase our activities, set up more activities here in the Netherlands. A permanent establishment is basically, as it's described here, a fixed place of business through which the business of an enterprise is wholly or partly carried on. That might still be a description that is not necessarily very helpful. And it's also because there is a bit of a gray area. One thing we would always want to look at is the tax treaty. And in the next slide, I've copied a few, some highlights from the double tax treaty. And basically the treaty between the US and Canada is basically the same. I'm not going to run through all the details here, but the line items here define that if you are a US or Canadian company doing business in this case, this is the treaty with the Netherlands, and you meet these conditions, you do not have a permanent establishment. So again, if it's only for storage or display of goods, it's only for maintenance of certain products, if it's only maybe some purchasing activities, or there is again the preparatory or auxiliary services, no permanent establishment. But let's say, okay, well, actually, we're increasing our business. We're going to rent an office, open up an office. We're going to maybe hire marketing personnel. We're going to hire some salespeople, maybe perform some R&D activities. At some point, local authorities will say, okay, now you actually have substance. You have a real business here, and you're running your business here to be able to make a profit somewhere. At that point, you run a permanent establishment. You are considered to have a permanent establishment, and in that case, you will have to register here further. Those are the last two things, and I'm going to, for the sake of time as well, run through that briefly. But what you would do in that case is you would basically have to say, okay, we now have to either incorporate a local entity or register a branch of the foreign entity, meaning you create something with substance, you set up a real presence here. Now, of course, we can guide you through all of that and discuss much more in detail what that could look like. There's a few pointers I do want to give on the next slide, which basically, if you do this, it's perfectly possible, of course, to hire your own employees. If you do that, always take into account local labor law. Keep that in mind. So if you're hiring an employee in the Netherlands, folks have an employment agreement based on Dutch law. If you do it in Germany, based on German law, etc., etc. But also consider some of the immigration options you have. Some countries here in Europe, and especially in the Netherlands, have a very strong immigration program, so you could very much take use of that. So keep that in mind. And then there's some expat benefits rulings that could be of interest as well. So just some pointers to keep in mind. The part about the European headquarters, I think for the sake of time, we'll probably skip that for now. We'd always love to talk to you about that, because there are some definite benefits, and maybe I think go to the 2 slides further. There's a little one further, I think, yeah, a little structure chart about how you could structure things. Now, I realize this might seem a bit overwhelming if you see it at first, but all of the pointers I want to make here is that it could be very interesting to structure your international expansion activities via the Netherlands, via a Dutch holding company, because of the combination of EU legislation, Dutch legislation, as well as the international tax treaties we have, can be quite beneficial. I'll leave it at that, because I think we still have quite a lot of questions I saw come by, so maybe we can spend some time on those as well.
Thanks, Jeroen, for that. Thanks for your insights here. You're right. There are a lot of questions coming in. I think for the sake of time, what we'll do is we'll actually collect all the questions. What we'll make sure that we'll have them answered. And for the audience, you will, like I said before, you will get an email from us with a link to the presentations and the webinar. And we'll make sure that within the email you receive, the questions will be answered. And there's going to be emails in there, so you can also always get back to us if you want to do some follow-ups. I'm just going to hand it back to Stan very quickly. Who's going to tell us a little bit more about the Netherlands. Thanks.
Stan, je staat op mute.
Okay, beginner mistake again. That you already mentioned that are coming up. And are you still there? I have a technical issue. I had a technical issue. Okay.
I think we're okay, Stan.
Okay, all right. There we go. So it's probably Netflix time in our country. So there are some changes coming up. Really briefly, it's already been mentioned. One of the things that companies that are not based in the European Union and are using a fiscal representation setup, combined with a third-party logistics company in the Netherlands, they may have found that there should be an exporter of record when they are moving products outside of the European Union that is based inside the European Union. So if that is an issue that you're running into, if you cannot export from the EU, from your third-party warehouse anymore, because you don't have an exporter of record that you can mention on the exporting documents, please connect to us because we can help you with that. Secondly, the e-com VAT changes that are coming up, and you already touched upon it, but it is a big change. We have a webinar coming up on March 1. So when the email that we are sending you probably tomorrow with the slides and the recording, it will have a link where you can register for our dedicated webinar on the VAT changes and authorized representation questions. We have a full hour on that on March 1. So I'll skip this one. So just as a wrap up, what do we see? And we work on 400 projects a year, and often we see the same type of structures boiling up. So here, these are a few scenarios. If you only sell online, but you do that through third parties or platforms that are actually the seller, then it's more of a B2B transaction that you're doing inside the European Union. And then a third-party logistics company combined with a fiscal representative is often the best setup. If you sell online yourself only to be a B2B, same setup works really well and is easy to set up. It's quick. If you sell direct to consumers, so you're the seller in Europe to European consumers, then we see a bit of a shift where more and more companies are choosing to set up their own entity because it does have a couple of benefits. It's easier to get your own bank account in Europe because, to be honest, it is difficult. There's no need for authorized representative because you can do that yourself, and it might be easier to do your VAT compliance. Of course, you don't have to do everything yourself. You can still outsource some of this work to third parties. But just to show that for some companies, this is a reason to set up your own entity. If you sell in large volumes and you can predict those volumes, it might be interesting to look at having your own fulfillment center. We can help with that as well, securing a building and finding people to work there. But even the largest players, the largest brands, they often still consider to outsource logistics. So why the Netherlands? We work a lot. We have not a lot of land to work with, but we do a lot of logistics. So a lot of the extra EU imports are entering through the Netherlands for distribution to the rest of Europe. So it's highly competitive, it's innovative, and we have the largest port and the second largest airport. The VAT deferment that was mentioned is an additional benefit that a lot of companies use. So then we have a couple of minutes left for Q&A, and I'll hand it back to Dennis.
Thanks, Don. Can you hear me?
Yes.
All right. A couple of questions here. Yes, you will receive a copy of the presentation. Maybe Göran, in case of having fiscal rep with Article 23, if you have unsold inventory, you will still have to make a payment due on those items each quarter, correct?
So when you have inventory, so when you import the products here, you have to pay the VAT upon import. But if you have the fiscal representation and the Article 23 license, you no longer have to prepay that VAT. So there's no cash flow there, no payment. As long as they're in your inventory, there's no taxation. So you only then have another taxation moment when you sell the product. But as long as they're still in your inventory, you still have to file your quarterly VAT return. But if there's no transactions, then there's no tax payable either.
Thank you. And then as a follow-up on the one-stop shop system, do we need to engage with various tax advisors to do the filings, or can my accountant file just from the Netherlands?
You can file that from the Netherlands. Yeah, you can. So you can ingest. Of course, you're not required to have a tax advisor. You could also do it yourself. I would advise you to have someone advise you and guide you through that. But the benefit of the new system is that you can all do it out of one country. So out of the Netherlands, for example, your accountant in the Netherlands can take care of that and do one filing for all these countries.
That's great. Thanks. I'm going through this. After July 1st, if you're an Amazon FBA only seller, will you still need to register for VAT in a European country, even if Amazon will be taking care of the VAT collection and remittance?
It's a good question. I would have to get back to you on that. I'd have to have a look at that. Yeah.
Okay.
Sorry. Yeah.
Thanks. I think in the matter of time, what we're going to do is wrap this up. Like I said before, all the questions will be answered in an email later as well. By wrapping it up, I want to thank all of our speakers. Like I said before, this webinar is recorded, so keep an eye on your inbox. You're going to receive a link to the recording as well as the slides that you've seen today. Again, thank you very much for being here. We want to wish you a very great day, and stay safe, stay healthy, and thanks for being here. All the best. Cheers.